Hey, Facebook Live. Looks like I'm live and streaming. I just want to make sure I'm looking at myself on the phone. All right. Just want to make sure I have this up here. Hey, everybody. How's everybody doing? This is Rich Fontaine with Daily Motivation. 365 days of consistency, doing the same things over and over again until they become habit. And today is a very special episode where I want to show you, audience, especially if you watch this now or later, I greatly appreciate it, how the wealthy budget their money. What is wealth accumulation? See, I was having a conversation with somebody the other day where they say wealth is the accumulation of income, but that's being rich. Wealth is when you have your income that is even passively exceeds your expenses. And many businesses have gone down because of lack of good money management. I actually used to work. Hey, Eddie, how's it going, brother? I actually worked as a project manager for a construction company for many different years. And that was our biggest thing. We knew it was a successful project is if we can get our expenses lower and the income higher. So today I'm going to show you how to do this. And this is actually coming from a program called Success 101. Success 101 that we're going to be launching fairly soon. But the main parts of Success 101 is Money Management 101. And I'm going to show you quickly on a screen share on the spreadsheet how to manage your money wealthily. So just give me one moment and I'll show you here as I do a quick screen share. And I'll show you exactly what I use in my own life. All right, so welcome to Success 101, Money Management 101 Spreadsheet, which I like to call Wealth Spreadsheet 101. And this is just showing you how to use our Success 101 spreadsheet. It's very, very simple and very, very easy to use. The only thing you have to do is put in your income and your expenses. So we're going to break down really quickly how to use this program, which is fairly simple, but it will make you a money management wizard. This is something me and my wife use. So even during hard times, we're able to stay afloat. Why? Is because we know how to budget our money, which will help you with taxes and if you ever want to get a bank loan. So this is actually very, very important if wealth actually is something that you want to accumulate. Now, so we're going to go to, I'll break down this sheet. The sheet is breaking down to a yearly full sheet total. So this is going to accumulate everything that you've done throughout the entire year. So if you, whatever you've done throughout the entire year, it'll populate here. And the best thing about it populating there is you can print it out and take it to your CPA whenever you're doing your taxes per year, which I put everything to get you a tax benefit, which is also important in wealth accumulation for your business and for your personal account. So both work perfectly in that source of creating wealth. All right, so we want to start with, say we're starting at the beginning of the year, January. This is how it works. It's very, very, very simple. We're going to first start with our business, okay? So this works if you have a business, and this works if you don't have a business. Either way, this works perfectly for you. Now, very first thing you want to do is, if let's say you have a service for your business where you do a monthly service or you provide something for the customer, whatever it is, you do a service. Let's say, like for myself, I'm an author, but I do coaching. So let's say for my coaching, month of January was all right month. I made let's say I made $500. No, let's make it a little easier. I made $1,000. Okay. So I made $1,000 in my services. Now, if you look over here to this section on your right, this is your Success 101 income chart. Now, this is really, really good. Again, this populates everything for you, so you don't have to do anything. This is how you want it. You want a spreadsheet just like this, so you don't have to think about it. You just put your numbers in. So on the side is, here's your total income, which 30% you should automatically take for taxes. Automatically take for taxes. And I'll show you why in a moment. But automatically you want to take 30% in taxes. In your business account, you want to take another 30%. That's to reinvest into your company and put for contingency savings. See, again, when 2020 hit, there was companies that didn't last 2 weeks because they didn't have enough savings or contingency account to keep them afloat, because anything could happen in your business. So what you want to do is keep an account, and we did this for construction. You want to keep an account that's contingency bucket, so if anything happens, you're okay with your business, okay? And then you have your annual salary, which you'll end up putting, which I'll show you in a second. See if you can do it there. All right, so say for retail, you made $500. We sold $500 worth of books. Say for affiliate marketing, we made $100. And all right, say no tips, no barter, and any other income. Say you got a gift, right? I always think any money you get should always goes towards your full on account. So let's just say, for example, for other, you took $100, or let's say for others, you got a $200 gift from a friend. All right. Now you can see all this is taken out automatically. You have your 30% taken out for your taxes, and you have your 30% taken out for your business account. Very, very important. This is critical. Now you have your amount remaining. Your amount, your amount remaining should actually go towards your income, but you still have to pay your expenses. So this actually has to go towards your expenses. So say for you had to get some office supplies, cost you $100. And now these are the only thing you put into this account is your income and your expenses. And each expense, I have actually a tab here. What the tab shows you is what the tab's for. So say for personal labor, for personal services given to a client or customer that you get paid for your work, right? Advertisement, any advertisement or merchandise used to promote your business. Now, everything I put here on the expense column are tax write-offs. That's what I did it for. So if you put it into this account, you know where your tax write-offs is. If you end up putting all your amounts in other, that means you're not spending your money the way the IRS wants you to. See, I put a tab down here, if you see it, which is other. Now, this other sheet is for any expenses that don't fall into these categories. But again, I warn you, if you're putting a tons of your expenses in others, that means you're not spending your money the way IRS would like you for you to. And so your business expenses really should be just strictly for business purposes. So say for supplies, I had to get equipment. Say I had to get a chair. That chair costs, let's say $200. All right. Let's say I had to stay in a hotel for a little bit, and the hotel was $100 in total for everything. And I took some colleagues out for a business dinner, and we spent $150. Okay, cool. Also, I put your room square footage. Like if you do a home office like I do, you actually could get deducted, or I'm saying you could withdraw that because that's a depreciated value. So you can deduct that from your taxes. So you always put your square footage. Say the square footage of my office is 750. Okay. And again, you have utilities, repairs, credit cards. Now, the credit cards are something different. You can't touch the credit cards here. But what you do is, and say for gas, okay, say for gas, I spent, I don't know, say 40 bucks this month. All right. Cool. So now, and say for my credit card, I have a credit limit of $1,000. And what you want to do is keep it under 30%. And so it even flags you on here because you want to keep your credit card under 30%. Why? Because it builds up your credit. So now if you have it over that, you want to be careful. So I have that there for you. So you know your credit limit is $1,000. So say for I spent 450 on my MX. Okay. But I paid off 200 bucks. So all I have to do is say on my MX, I put 450, but I paid 200 off. Okay. And that's going to show up here in your credit card statement because it shows you what's remaining. Now, your remaining balance, you always want to keep under 300. That's your goal. If you keep that under 300, if you have basically 30% of your credit limit, you are putting yourself into to build up your credit. Okay, cool. So now all this has the numbers for you, and it also has your DTI, which is debt to income ratio. So you want to keep this in the black, right? See, oh, credit card percentage, 25%. That's what you want. Once it hits over 30%, it'll turn red. So you want to stay in the black. And even your DTI is 35%, which is good. You want to keep that in the black. Once it starts going into the red, that means you are overspending what you actually have. Okay. Now, say you've already put your money into your and your monthly savings already is generated. So you don't have to worry about, okay, calculating the numbers. All you do is put your numbers in and then follow the chart. The chart's basically telling you what you should do in order to create the wealth that you're looking for. All right. So again, you have your expenses, you put there, you put your credit card information here, which you can change. Like if you have an MX, MasterCard, Capital One, either or, you can also change that as well. Perfect. All right. So now you have all your income. It tells you your DTI percentage, your debt to income rate. So if you're in that month and you're in the black, you're an excellent money manager. If you start going to red, it's okay. It does happen to even the best business people. You just have to start maybe offsetting the next following months. But as long as you have it on your first month, you're good to go. All right. So now you have your DTI, and now you have your credit card percentage right here, 25%. That's good. Anything that's under 30%, you want to be. All right. And your monthly savings. All right. So everything here is calculated for you. You don't touch any of this. This is just giving you information to let you know where you're at. Now, your cash flow for the month of January. This is your actual income. Because people like to say, oh, my income was, oh, no, I made 2,400 this month. No, you didn't. You made 1810 because you want to take account your expenses. So all this is showing you your actual cash flow from the money you got in and your actual expenses. This cash flow for the month of January actually shows you what you earned, what you really earned, not just what you made net, is what you made gross. Okay. So perfect. So that's what you want to really look at is your 1810 to see how much cash flow. Because if this starts to get under zero or negative, you have to say, okay, how can I lower my expenses? Great. So now you finish with the business part. Now you click onto your personal. Now everything from your business has been transferred. So your recurring bills, your debt, everything was actually transferred over. So your business income should have been in here. It's not. So that might be just a little program error, which we'll definitely fix. All right, but anyway, your business income should generate right here, which it's sorry, just double checking this really quick. 18 to 18, 18, 18, 18. All right, there's a calculation error there. So, all right, so usually your business income will generate right there in your personal. All right, so you don't have to worry about that. Now, let's say you did a part-time job, right? You say you have a 9 to 5 while you're running your business. All right, so say if your salary was 3,300 that month. All right, it calculates everything for you. Now, your total income, it breaks down how much you should save from your total personal income. Again, if you ever take the Success 101 course, we tell you about your Success 101 account, what that's for, your Fun 101 account. So let's go over. Your Success 101 account is your building block. This is the money that you're going to save to make some of your first major investments, to start getting passive income. That's the goal, is you want to have your passive income exceed your expenses. So you want your passive income to exceed your expenses. So once you have, so this will actually, once this takes all for you, so you don't have to do anything. Once you put your income in, it shows you how much you should save in your Success 101 account. Then it shows you how much you should save in your Fun 101 account. The Fun 101 account is for you to go out with, so you to go have nice dinners, so you can feel wealthy. You know, you say, oh, the wealthy, they go out, they take trips, they do things. They actually have savings accounts for that. They don't just take what they make and then start spending it. They have a specific account that they put into a savings for that. Your education account, you want to save for up knowledge, books, courses, workshops, because the more you know, the more you grow. If you want to become wealthy or you want to create a good lifestyle for yourself, you have to keep learning because things are constantly changing. All right. And then your charity 101 account, that's for your tithes. It's just 10% of your income to give away for a special cause. All right. Because that brings, there's something about the law of compensation. What you give is what you get, especially if you give from your heart to help somebody that's in need. And this generates all that for you. Also, again, your DTI, and it generates your credit card for your personal. Your savings are automatically put in there. Your remaining budget. So this shows you how much money you have left after your expenses. This shows you how much you put in your credit cards, in your business credit card, and your personal credit card. All right. So it calculates all the money that you owe for your business and for your, so this year, so your personal shows you everything that you owe and everything that you put forth. All right. So let's say you had to pay your rent this month. Say your rent was 2 grand. Power was, let's say, 150. Water was 100. Your internet was 45. Say you didn't have to pay insurance this month. Say you got your car. Always put your auto miles too. Your auto miles will actually get you deductions on your taxes. So say you put your auto miles, put that in there for you. Groceries, you spent say $300 this month on groceries, and et cetera, et cetera, et cetera. You put that all in there, and then it calculates your expenses. And again, your cash flow. So your cash flow is a little bit low. Only reason is because your business account has to be put in there as well, which it will be. But once you have that full calculation, it shows you for your cash flow for the month of January was only $115. So you might have to do some changes, lower your expenses so you can increase your cash flow. This is how you just take account with your money. The thing about money is I don't know where it all goes. I used to say that. I remember when I was early 20s and I just had no idea where all my money went. And I was always scrapping for new money. Always trying to hustle more. I even worked 2 jobs and still didn't have enough because I was not a good money manager. After I took T. Harv Eker's course, and I started becoming a project manager for major corporations like Disney and Universal, I realized how important money management was. So my buddy of mine came up with this spreadsheet. This is what I use every day. Me and my wife use, and it keeps us on task and on target because it just shows us everything we need to know. All we have to do is put in our income and put in our expenses. So after I spent all of my expenses, which came up to 3,100, I didn't have enough. So I'm actually in the red because I only had to spend the remaining of the 1980 after all my savings. See, the difference between wealthy and non-wealthy is they grab the money and put their savings first. See, Robert Kiyosaki taught me one thing, and one thing I always keep in mind is the rich pay themselves first. So what you want to do is pay yourself first, then put your money, then the remaining money goes towards your bills. So now if the remaining money is not enough to pay your bills, you have to find a way to lower your bills and expenses. That's how you keep a DTI above a high percentage. This is actually very low, negative 109. That's a very, very low percentage. Actually, yeah, that's underneath. You want to find a way to increase that. So every time you always want to make sure that this goes to positive, your debt to income ratio, and your credit card is under 25%. Okay, so let's go for example. Let's say I have my personal Visa. I pay 400 bucks on that, and I haven't made a payment. Okay, now you can see my credit card is up to 65%. I'm using credit usage. Not good. You don't want to do that. You want to increase that as high as you possibly can. All right, so let's say for example, my personal and my business credit card comes to a total. So this actually, what's your total credit limit? So let's say it's 200 with both of them. Now it goes down to 3250, which is fine. All right. So you just want to kind of keep account these things. So again, this spreadsheet is going to be available once the Success 101 course comes out. But I want to give you guys a quick sneak preview of how boring becoming wealthy is. It really is, because it's all real math. And what I want to do is create something that was simple for people, that all they had to do is put their income in and expenses, and the thing spits out everything for them. So if they follow everything to the T, everything will work out for you. Now, can you follow everything to the T? No. Sometimes things will be a little bit off. So what you want to do is say, hey, Rich, for my charity account, I just can't save 300 this month. I need that money for something in the expenses. All you need to do is go to other and take that out. Or I'll do one better. Add the $333 to your income, because that's income that you're going to use. So instead of 333, just add that 330 to the income. Just add it. It's plus sign, 330 equal. So it shows a higher, but it's all going to end up evening out. It's going to even it out. But if you could do your favor and follow this to the T as much as you possibly can, this spreadsheet will work wonders for you. It will work wonders for you. And again, you could always email Richard at info@powerofselfent.com. That's info@powerofselfent.com. If you have any questions or have any troubles with the spreadsheet, we can show you, and our customer service reps will show you exactly what you need to do to make sure you stay on task and on target. But this spreadsheet is probably the best thing you could possibly use if you own a business, or because most people want to go to an accountant. You can save tons of money going to an accountant, even though a CPA is great and accountants are great. But Fat Joe once actually got embezzled by his accountant. His accountant took his money and moved to Miami. Why? Because he wasn't looking at his own money. So I always say, if you're going to be a business person, an entrepreneur, it's always good to take account of what you're making for your personal and your business account. And once you do that, everything else will be set for you. All right. So that's basically how you use the spreadsheet. And if you have any questions, again, email us at info@powerofselfent.com, info@powerofselfent.com. And this actually is going to be available fairly soon for you, so you can check it out and use it yourself. All right, guys. Again, this was a little bit different. I just want to do something a little bit more technical to show you that there's different sides. It's just more than motivation. It's the technical side as well that is good to get with. And if you can't do it yourself, get somebody that can do your accounts for you. But this spreadsheet, to me, is the best way, because it shows you in real time where you're at financially. All right. Well, again, this is Rich Fontaine, the Power of Self Entertainment. You could agree with me or not agree with me, but either way, I feel this was a successful conversation. Love is love, and I appreciate all of you. Have an awesome day. Namaste.